So this is the email that I got from Chase. Uh, from Chase. So hopefully no one fucking hacks me or other weird shit that people do on the internet. So go ahead and go full screen on my browser. You could probably kill Mo's feed if you want to hit the little eye on that. Transition over. Great. All right, let's see if I can get this a little bigger for everyone. There we go. Look at that. All right. So Chase sends me this email Friday, 12:30 p.m. Sad afternoon. SBA has committed all the funds from the first round of the Paycheck Protection Program. Thanks. Tell me something I don't know. Dear business client, as predicted, the SBA's Paycheck Protection Program was hugely popular. In fact, we have learned the SBA has approved loans that will exhaust all of the funding available for the initial round. We have notified all of our customers who received funding in the first round. I wasn't one of them. That's why I'm getting this notice. It says we understand that many of you are disappointed and are frustrated because we haven't updated you on the status of your application. This is true. And we will do better starting in the next days. Congress is currently considering another round of funding. In the interim, we're committed to continuing to work our existing queue of applications so we can be ready, contacting you with questions, emailing you on the status of your application, and letting you know if and when additional SBA funding is available. We realize how important these SBA funds are for your business. We're doing all we can to have your application ready. Thank you for being a Chase customer. Go fuck yourself. Chase doesn't care about you. Signed, Jennifer Roberts, CEO of Chase Business Banking. I hope you can see the screen because the last part of that was a joke. So yeah, so Chase, massive fucking bank, uh, can't figure this out, right? They're waiting for the government to tell them what to do, and I get it, right? They're a business, they're risk averse. They don't want to give out money that they don't know is going to be guaranteed by the SBA. Whatever, man. You're a bank. Your job is to take care of people when they need it the most because we've entrusted you to hold our funds this entire time. Chase actually recently, this is how good, and we're going through this again. This was the whole 2008 thing. Everybody was leaving the banks and all this stuff, saying support local credit unions and all that. And you know what? Unfortunately, as a business owner, sometimes you have to do what's most efficient for your business. And Chase's banking network is just so robust and large, and the products they offer, like it makes so much sense. It's just I wish that could come without the shitty operational back end. So Chase increases the mortgage. Let's check this out. So another thing Chase did this week that was on the shittier end of the spectrum. If we can go, I'm still on full, right? So JP Morgan Chase to raise borrowing standards for home loans. So what does this mean? This means uh, if you're a small family, this is basically going to decimate the small family. Small families, obviously, the ideal vessel for wealth accumulation and growth is buying a house for you and your family, right? And previously, you could buy a house. Interest rates are at record lows. Banks had kind of figured out what they did wrong in 2008, and they started lending money to people. I was one of those people that was very shocked to get a home loan, but I got it. Well, now that's going to be no more. And so when we talk about the economy tightening up and not being what it once was, hustling and bustling, all-time highs, Trump economy, best economy in the world, all that shit, things like this whole JP Morgan, this Chase tightening this thing, this is going to put a halt on regrowing that economy as fast as possible. And again, this is risk aversion. This is Chase trying to protect itself from what it foresees to be risky lenders in a risky time. Some of you may say, well, they're not wrong for that, right? Well, it depends on how you look at the economy. Depends on how you think the world should live. We just had a conversation about coronavirus changing the priorities of humans. We can't take any of this with us when we die. And I understand wanting to have a really good life while you're here. But everything's not about money, man. It can't be. It can't be. That's how we got into this mess in the first place. No reserves, no savings. No one had anything. And yeah, some of the responsibility falls on you for sure. You should have been saving up for a rainy day. But I will also fight for you if it's you against the government and both of you guys are in the wrong. They're in the really, really wrong, right? This is what our government's for. This is why you pay your taxes. This is why we haven't burned this bitch to the fucking ground yet, because we're expecting it to still work for us. So when we look at the largest bank in the United States tightening their borrowing standards because they want to be risk averse in a time when they should be looking at alternative ways to reinvigorate the economy, it's kind of saddening, right? It just literally shows you that they do not give a shit about you, and I hate that that is the reality of the world. So the bank nation's largest lender by assets and fourth largest mortgage lender in 2019. Sorry, let me make this bigger for you guys again. Oh, is that too big? No. Let me close this here. So I'm here. The bank's largest. Can you move my box to the right, please? Because we're covering the words. So the nation's largest lender by assets and fourth largest mortgage lender in 2019 will require any new mortgage applications to make a down payment of 20%, whereas 10 was the standard, right? And you have to have a credit score of at least 700 beginning on Tuesday. Here's the thing. Let's do some simple math. Okay? You live in Chicago. You want to buy a house. You're looking at least 200,000. At least for like a fucking little shoebox that you're going to live in, right? Let's say you got kids, right? You want to buy a 2-bedroom, 2-bath home in my neighborhood. My neighborhood is being developed at the moment. It's you get a house around here for like 220. What's 20% of 220? I got to use a calculator. I'm smart, but I'm not fucking genius. So, let's see. There it is. $44,000. $44,000 to get a $220,000 house. Do you know anyone that has $44,000 put down? It was hard enough for them to get $20,000 in the first place. The average American makes fucking $40,000 a year. So yeah, I find it's just I'm sharing this with you because I want you all to be more well informed about what's actually happening in the economy instead of I get paid, I put my check in the bank, I pay my bills at the end of the month. I want you guys to be actually more aware of everything that's going on around you and how these institutions are really not working in your best interest. And I hope that in the near future we can figure out a way to rectify this in the same way that we said we were going to do it in 2008. And, you know,